This is my financial disclaimer so I don't get sued. Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In this video, I'll be going over the datasets, the earnings, and doing a technical analysis over the SPY slash the overall market for the week of April 13th, 2026. And just a reminder, this week, usually I would be streaming Monday, Wednesday, and Friday around that 9:15 a.m. Starting time. However, this week I will be streaming Monday, Tuesday, and Friday. I have to get the stitches taken out of my head on Wednesday morning about 20 or 30 minutes after the market open. So unfortunately, no stream on Wednesday. However, Monday, Tuesday, and Friday this week we will be streaming. So hopefully look forward to seeing you there. And with that said, let's go ahead and get started with the data. Now, there really isn't a whole lot going on this week in terms of the data sets, also the earnings. Um, with that said, Monday we have the existing home sales at 10 a.m. I wrote down no major data. Really, the existing home sales isn't going to move the market too much unless it's some, 2008 type crash ordeal. We're not in those circumstances right now, so not really paying too close attention to that currently. Now for Tuesday at 8:30 a.m., we have the March PPI data, and also at 8:15 we have the weekly ADP employment change. Not really expecting anything crazy out of that currently. There was a revision to the last few months of employment numbers. So when we saw February being, quote unquote strong, they actually did a downward revision overall. So February came in much weaker. Now, core PPI, I don't have much to say about it. It's the producer price index. Um, the forecast is expecting a slight increase. I agree with that. With oil prices moving upward, that kind of puts pressure on pretty much everything. So seeing producer prices moving upward would be out of the question. Um, really, that's mainly it for Tuesday. I don't keep track of Vice Chair Barr's speeches. He doesn't usually say anything important. In the last, 4, 5, 6 years, whatever, I've been tracking market data. He's never once said anything important, so I don't pay attention to what he has to say. Wednesday, April 15th, we have the export import data for March. Now, again, this will play a role into the GDP data as the export and import data pretty much plugs right into that. So while we don't have the GDP data this week, I believe it comes out next week if I'm not mistaken. I'll have to check that, at another time. But with that said, export and import prices are important, but they won't shift the market too much. We shouldn't really expect anything, you know, too out of the ordinary with those. Um, we also have the New York manufacturing index data. So really, I'm not expecting a whole lot of movement out of the Wednesday morning data. Now we do have the beige book at 2 p.m. on Wednesday. That's fairly important, but I'm not really expecting a whole lot out of the beige book right now. I mean, obviously I'm gonna read over it. It's important to read because it will tell us the overall sentiment for the uh not just the market but the economy because this talks to business leaders uh and gives us a real look of, what sectors are seeing weakness or growth. So very likely this beige book is going to show a lot more weakness. It will be interesting to see, but I don't really expect it to move the market too much unless there's something in there talking about fears of inflation, something like that. Now on Thursday, not really a major day as well. However, it's probably the most important day this week. So at 8:30 a.m. we have the jobless claims. Um, the initial jobless claims have slowly been holding, they've been basically holding that 190 through 220,000 um, a week. However, we've been seeing the continuing jobless claims continuing to trickle downward. Does that mean we're starting to see more hiring? Not entirely sure. It could just be people falling off unemployment. Um, we will have to go over that more thoroughly in the weeks to come. But we also have the Philly, the Philadelphia Fed Manufacturing Index. So that's the I'm not too focused on that part so much. What I'm focused on is the Philly Fed employment for April. That will be pretty important. Because that will go kind of hand in hand with the jobless claims to give us a better picture of what's going on with employment right now. At 9:15 a.m. we have the industrial production. Again, I'm not really expecting anything too much out of that. And for Friday, there really isn't a whole lot of data. There's basically only Fed's Daly speaking at 11:30 a.m. and then Fed's Waller speaking at 2 p.m. Um, I'm really not too concerned about either of those too much. So for this week, really not a whole lot of data. If anything, it's going to be Tuesday's PPI data and Wednesday's beige book, but overall, really tame week in terms of data sets. And to go with this, we will take a look at the earnings. And going over the earnings here, we really have a pretty unremarkable week. We do have two very important earnings this week, which is ASML. Well, three very important earnings, excuse me. ASML on Wednesday in the pre-market. Again, they're a major semiconductor, so that's going to be very crucial for the market. I don't really expect ASML to, rally the market or dump the market, even if they have a good or bad earnings. Semiconductors are kind of in a point in the overall market right now where they're just seeing a whole lot of weight pushed into them regardless of what they're doing right now. Um, with that said, TSM is on Thursday in the pre-market as well, so two major semiconductors this week. And then in the after hours on Thursday, we have Netflix. So Netflix, I don't really expect to rally the market or dump the market if it has a good or bad earnings. I don't think the market cares too much about Netflix right now. If anything, it's ASML and TSM. Um, but I don't really expect anything, grand out of those earnings either. It's overall a pretty tame week in terms of data sets and earnings. So with that said, let's go ahead and jump into the technical analysis. If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime. And getting into the SPY technical analysis, as always, let's go ahead and start with the Bollinger Bands and moving averages. Now, the moving averages, as you can see, have been pulling up pretty aggressively. Does this mean we are out of bearish conditions though? No, not yet. We're still very much within the woods, so to speak, and there's multiple reasons for that. One is that the 50 MA is currently at the 672.99. This will be pulling down very likely just a teeny bit come Monday. If not, it'll be holding pretty much the exact same level pretty because the market's, slightly above it, so it'll be either holding that level or pulling up very slightly. Basically, it's at that 673, right? At that 673 level, we have the 5 mile currently underneath it. So the 5 mile on your end is going to show around the 672 um 40, if I remember writing that down correctly. On my end, it's at the 670.71. Now, the overnight is pulling down pretty aggressively because of the news with the Strait of Hormuz being, or, having the US blockade on it. Now, with that said, um, usually I would expect the 5 mile to be pulling up pretty, much more aggressively in terms of um, what happened with Friday's price action. We had the day two upper Bollinger. Doesn't look like it on here, but we did. We had the day two upper Bollinger, and from that we had the rejection back towards that 5 mile range. Didn't pull down all the way, but it started to make that consolidation move. We were able to establish that there was bearish structure building up there. Anyway, long story short, the 5 mile is going to be slightly underneath the 50 mile. Um, if we have a 5 mile test to the downside, which we're fully expecting here, remember we had the day two upper Bollinger move. Day two upper Bollinger means that day one we secure the upper Bollinger, which we did. It looked like we didn't because we were actually 5 cents off on the close. But for myself and many others in the group that I consider experts, we all were in agreement that this was an upper Bollinger day one close. From the upper Bollinger day one, we had the higher high of the upper Bollinger day two. From the upper Bollinger day two, we expect a consolidation back down towards the 5 mile. Well, with the 5 mile basically being around that 672 range, the overnight is at 674. It did pull down towards that 672 slightly. Very likely it's just building some overnight structure. I'm not too concerned about that. But with the 5 mile being at that 672 range, that means that the lower bounds of the 5 mile is going to be around that 670. That means that very, very likely, if we're going to be seeing a pretty aggressive selling day tomorrow, which I personally do think we will be, I do think we will be starting to see that sell-off starting to kick back in again. Um, that means that we can see the 5 mile reject the 50 mile and start pulling back downward again towards the 200 mile. Now, the 10 mile is at the 658.10 and it is slightly above the 20 mile. So that is short-term bullish. Okay. As of Monday, the 10 mile will be pulling up even slightly higher than that. So still overall short-term bullish in terms of the 10 mile, 20 mile, and the 5 mile. However, the 10 mile and 20 mile are still well below the 200-day moving average. And that's still going to take, at least a week or two if we trade at the current price we're at, to pull upward. Okay. Well, I don't think that's very likely. What is very likely is that we have three major moving average supports here. Very likely we're going to be seeing a rejection of this 50 mile range and the 5 mile slash price action starting to gravitate towards the 20-day moving average and the 10-day moving average. Um, which when that happens, even though we see the 10 mile and 20 mile slowly curving upward a little bit, they would begin to pull back downward, and that'd be well below that 200-day moving average. So we would start to see the bearish trend not only continuing, but fully rejecting the one solid bullish outbreak, okay, or potential outbreak. Um, that's a major deal. Okay, that's a major deal, and this is exactly what I was looking for in terms of creating new positions to the downside. Now, I'm gonna pull up some drawings, and I do apologize if everything's a mess. Oh geez, it's a mess. Okay, hold on. We're gonna turn off the moving averages here. So, hold on, I want to show the 4-hour time frame just for a moment because I made a note up here and it was a very crucial note, but I want to show this note before I delete all the drawings. And that's that I was telling everybody that this is the time for extremely dated short positions and at least 2 week out minimum puts. Okay. And the reason why I was expecting that was this was the upper Bollinger day two, and we actually had a very, very large push above the 20 mile. So I'm going to go ahead and delete all my drawings for a moment. But we had a very large push from the 20 mile. So originally if we opened the day after this news, which I believe was on Wednesday, so um or no, that was Tuesday night, Wednesday. So Wednesday we had the massive push upward. Thursday, um, Thursday we had the upper Bollinger Day 1, Friday upper Bollinger Day 2. Okay, so that's right. So Tuesday night I talked about how um this was a time to enter some about 2 week out short positions. And the reason for that was that just in case the news was going to be very bad. And personally, I thought that the news was going to be bad. I thought that the ceasefire news was not going to take place at all, and that we would see this move to the downside. Sorry, my cat moved my arm right as I decided to draw that arrow. Um, but that we would see this rejection off the 20 mile and start heading to the downside. Now, we didn't see that happen. Okay, obviously, we had the ceasefire news go through on the morning um that came through, so that Thursday morning. um we discussed that we needed to close those puts that we opened, and we need to wait for the upper Bollinger to occur. Okay, because from that upper Bollinger, very likely it's going to give us an extremely opportune time to short. Now, from that range, we took the short. Okay. Now, this can just be some very minor short. If there's going to be news that's going to support, the ceasefire continuing, or, the escalation, um, or, the conflict not escalating and instead de-escalating. But we're not seeing signals of that yet. So very likely what's going to be happening here is now we're going to start seeing that breakdown back down towards the lower Bollinger. Okay. It wasn't exactly the move that I anticipated. Again, I anticipated originally the 20 mile rejection. However, we did have the good news. We had the push to the upper Bollinger. From the upper Bollinger, we had the dated shorts. Oh, sorry, I thought I just knocked over my coffee. My cat's in my lap. And from the upper Bollinger, we had the dated shorts. Now, from the dated shorts, you can look for multiple different ranges. One, you can look for the 5 mile, because with how the market is positioned, we can have a bounce from the 5 mile. So potentially we retest the 5 mile. From the 5 mile retest, we have some sort of positive news or something that pushes us upward back into the upper Bollinger. We start pushing back upward towards this, 680, 690 range, and pretty much break through all of this bearishness. Now, that's not what I anticipate. What I do expect is for us to basically see this 5 mile test, for it to reject, so this upper side move to not go through, and for this downside move to fully play out. And this downside would take us very likely, but at least currently with the lower Bollinger being at the 632, it would take us very close to that 625 range. Okay, so with that, and I want to go ahead and turn off the moving averages here for a moment. We can start to look for some longer dated bearish structure. Sorry, my hand is still broken, so it is still hard to draw. But with us basically having that bad news coming through, with us testing the upper Bollinger or seeing the upper Bollinger play out, our expectation should be that the market should be trying to head down towards that 20 mile range. From that 20 mile range, we can potentially start seeing some bullish structure playing out. I more so expect consolidation to create this right shoulder. From this right shoulder, we would Sorry, somebody is outside honking their car, causing my dogs to freak out. Thank you, person. Um, would create this right shoulder. From this right shoulder, retest the 20 mile. We didn't really have a very quality 20 mile retest in here. If I remember correctly, we were testing below the level and kind of just overshot the level with the news of the ceasefire. So I'm expecting bearish structure to build down, retest this 20 mile range, potentially see some consolidation. And from this all, create this larger inverse cup to the downside. I do have this very light, so it's kind of hard to see. I do apologize, but that's the expectation really over the next week and a half, unless we have some sort of major sentiment to change that. Now, again, with a blockade, blockades are not short-term moves usually. Usually they're longer duration moves between Iran having their side of the blockade and the United States now having our side of the blockade, with us now starting to enact strikes again. Um, a lot of signals are telling us that very likely this upside liquidity was exactly just that. It was just liquidity to create more downside in this overall structure. Now, many are thinking that this is going to form a bullish cup and handle. And while I want to be a little positive and say that that's potentially something that can happen, what I'm really looking at here is that we really took this liquidity right here. Okay, and what this is a massive inverse cup. Okay, with this being a massive inverse cup, this means that this structure right here is its own structure. Um, so I don't see that as being a bullish cup. I see that as very likely um forming a bearish structure on this handle to overall create, or excuse me, forming the bullish structure on this handle to pull upward to create that liquidity grab. And then now we can start seeing the market break back downwards. Um, so overall, no, I am not bullish. I do expect the market to continue breaking down. Now, with that said, there are a few conditions we need to be aware of. Okay, and I just want to turn off all the drawings here. Well, no, let's go ahead and turn on the drawings because I do think I was showing an example of this prior. So I want to go to the weekly chart. I want to go to the year to date, and this really covers. Actually, I want to, yeah, daily chart, and this will really cover what's been going on with pretty much every single symbol, um, over the last year. Okay. Well, at least since January. Okay. Year to date. So I'm trying to make it so it doesn't cover the whole screen. Hold on. I'm going to turn off a few things in the top and turn off the moving averages just so we could see here. So within the SPY daily time frame, we could see that since the beginning of the year, we've been pretty much in a sell-off. Um, the last few days, basically last week alone, was pretty much the only buying we've really seen this entire year. Now, let's look at semiconductors. Well, the entire year they've been massively buying upward. So I don't expect that to change. I expect semiconductors to continue their path upward because even though the oil volatility really began in February or early March, late February, the lead up to that was certainly already occurring. Okay. Um, insiders were definitely already starting to move funds by that point. So semiconductors became a very safe buy to the upside. So we're going to be looking for a major buy to the upside in semiconductors. It's not ready yet. We're at the upper Bollinger, but expect semiconductors to see massive strength continuing throughout the rest of the year. At least while this conflict's in play. Now, with tech, we see how tech has been pretty much in a massive sell-off for the, the first quarter of the year, and then since this ceasefire news came out, we have seen a little bit of buying. Now, within this little bit of buying, we're right back at a major liquidity level. So potentially the market is trying to grab that liquidity. And again, sort of like what we saw in the SPY, head back downward. So very likely this will turn into a selling block of liquidity, just like what we're seeing, you know, what we were seeing throughout the beginning of the year. Um, so tech has been in a selling posture. I expect it to continue selling down. That's why I took the TQQQ puts for the long dated stuff because tech really had a ton of weight to lose. Um, let's go over oil. Sorry, I'm trying to circle around to it. Now, oil, it's kind of a no-brainer. And I do apologize for some of the sloppy structure here, but we've been seeing massive buying throughout the entirety of the year. Now, there was potentially this head and shoulders starting to form. However, that's absolutely not going to be the case anymore. Um, it's very likely we're going to see this bounce back up to the upper Bollinger on the daily time frame. And so I can delete this head and shoulders because extremely likely that this is going to form that cup back up to the 143.98. So this would become that cup and handle to the upside. Um, again, pushing us to very, very dangerous all-time high levels. I shouldn't say all-time high levels, at least within the last 10 years. Okay. So ever since the beginning of the year, we've been seeing oil climbing. Since the beginning of the year, we've been seeing volatility on the rise. Now, again, we have a short term pull downward, but it's very funny how these charts work. Very, very funny. But with the news um, coming in from, overnight and everything, very, very likely this major trend line that I drew um, is now going to see a bounce to the upside. So VIX is now going to be back on the rise again. So volatility will be back on the rise. Treasuries will continue being on the downside, and I do apologize for all the sloppy structure there. Um, but just mainly pay attention to this red box. But there is a very large head and shoulders forming here. And this is telling us that very, very likely we're due for some major downside in treasuries. Okay. They have been in a major selling posture for the majority of the year. Now, there was some slight short-term buying in here prior to the major oil volatility starting, and this was because the Bank of Japan was starting to intervene within the yen. Uh, they had to put that entirely on pause ever since the conflict in Iran started. So, very likely we will continue to see treasuries selling to the downside until this conflict, settles down. Um, I think that covers pretty much everything. Now, one thing that I do want to kind of close this video out with is drip, is that we have been starting to buy drip positions, and I want to really mark the exact level we entered at because we've been entering basically right at that 4.8. I have a few buys in the 4.7 range, but mainly we've been entering at that 4.8 range, okay? And again, the upside we're targeting um is anywhere from that $7 to $10 range. Now, with the conflict continuing, this very likely means that we will be seeing a short-term pull down. So, if you're in these positions, this means that we will be seeing some red. Okay. Um, if you're in the calls and everything that I took, you will be seeing these positions in red for, a short while. There is some bearish structure starting to build here. However, the downside is not super, super grand. Okay. Um, Meaning I'm not expecting a whole ton of further downside from drip. Uh, while this conflict can continue, this will start to slowly decline slower and slower because the fund is decreasing. Now, I don't expect a reverse split anytime soon, but if there is a reverse split anytime soon, I will be letting everybody know well in advance. However, we will be looking for this 3.7 range, and from that 3.7 range, we will be looking for a major push to the upside. So at that 3.7 range, I will be doing a massive, additional buy-in, and anywhere below that, I'll just be slowly adding into these positions. Now, with every single day trade I do, I'm going to be adding at least $5 of the profit into, drip. So basically every $12 I make, I buy 3 drip shares. Okay. Um that's not going to take the entire profit of the day, but I want to make sure that I'm continuing to add to this, whether it's through shares, whether it's continuing to buy calls. Um I want to ensure that I'm continuing to short oil because this conflict will end, and when this conflict ends, oil will drop very, very sharply. Okay. When oil drops very sharply, we will see drip spike pretty large. This is in 2005 when we saw the strikes in Iran, or some of that conflict in Iran. Prior, we saw drip go from $10 all the way to 17. There's another event in 2022. Now this is a reverse fund, so let's see, this was a reverse split, so I want to do prior to that. So it pulled down to this $11 range and then moved all the way up towards the $26 range. So overall, drip does move very aggressively. Um, Again, we do have to be cautious of a reverse split. This kind of works like UVIX, except it's not going to have such a massive decay to it and things like that. But I want to be having a very long-term short on oil. Okay. Um, Even if this does a reverse split, what I'll just do is sell the calls out, collect the premium, whatever I have left to collect on those calls, and just buy more shares. And then once the reverse split goes through, then we'll just tack on some more calls after that. But I'm not expecting a reverse split anytime soon. What I'm really trying to go back to is oil USO here. So with USO, again, daily time frame, when oil, and this was a very massive increase. So I'm going to put the weekly time frame here. But when we've had some of these major oil conflicts go on, we see the prices of oil jump very quickly and then they pull down basically to the 60 to 70 dollars a barrel range. And that's really what I'm targeting is that 60 to $70 a barrel range. Already have it marked out. It's this I don't want it to have this entire white mark. I want it to be basically right in there. Really, that's our target. and that's going to be the target over the entirety of the year. So, I'm in this fund for the long haul in terms of adding to drip. So, yeah. Okay, long video, everybody. I do apologize, but that should be covering it. I will be live in the morning at around 9:20, 9:25 ish, give or take. We'll go over day trades, all that good stuff, and I will try to post further videos throughout the week this week. Again, last week I broke my hand basically on Easter, so it was just a very, very difficult week for me to stream and everything. Now I changed my cast, so I'm able to use my right hand again, but I'm only able to use uh my thumb and pointer finger from it. So while I can draw a little better, it's not back to 100%. So okay, think that's everything. Have a great day, have a great night, have a great week, everybody. I will talk to you in the morning, or in my next video. So take care and thank you all for watching. Thank you for supporting. Thank you all for commenting and everything. It really helps uh, get the videos out to the algorithm when you like, you share, you subscribe, you comment. Really means a ton to me. So thank you, thank you, thank you. But yeah, with that said, I'll stop rambling. Have a good one, everybody.